Right now, the financial markets are sending out this really strange, really urgent signal. It's like it's telling two completely different stories at the same time. One is all about prosperity, and the other, well, that one's about crisis. So we're going to dig in and try to figure out what's really going on.
Okay, let's kick things off with a really important idea from our source material here, and it's this. This story, it isn't really about gold, not at its core. Think of gold as just the messenger. We're here to figure out what message it's trying to deliver.
So what exactly is this message that gold is sending us? Well, the clue, it's all in how it's moving.
Look, most people just watch the markets go up and down. This channel is for people who want to understand why they move. If you want to stay ahead of that curve, go ahead and subscribe. I mean, just look at this. Gold has absolutely skyrocketed, blowing past levels that people once thought were impossible. And it didn't just slowly creep up, right? No, it shot up almost in a straight vertical line. Believe me, that kind of acceleration, it's super rare.
But what does a move like that actually mean? It's definitely not a sign of good times or a booming economy. Not at all. A surge like this, it only happens when investors are getting really worried. It's a sign that they're starting to lose faith in the very systems they're supposed to rely on.
And this is where our mystery really kicks into high gear. Because at the exact same time that gold is screaming that there's a problem, another part of the market is, well, it's throwing a massive party. It's a total split personality. On one hand, you've got the gold market acting like the sky is falling. But then you look over at the stock market and it's just hanging out near all-time highs, as if everything is perfectly fine. These are two completely opposite stories being told at the exact same time. It just doesn't add up. And here's the kicker. This has never, ever happened in a sustained way before. It's a brand new puzzle, right at the heart of the economy. So the big question for us is, how can both of these things possibly be true at once? Okay, so to get to the bottom of this, we've got to look back. We need to find some clues in history. And it turns out there are only two other times since the US left the gold standard that gold has made a move quite like this.
First up, you have the 1970s. That was a whole decade defined by a massive inflation crisis that just shattered people's faith in the US dollar. Then, fast forward to the 2000s. You had the dot-com bubble burst, and then of course, the huge financial crisis where the whole system almost went under. Let's be clear, both of these were times of serious economic pain.
And when you look at them, a really clear pattern emerges. In both of those crises, gold became the go-to, the asset of last resort. And what happened to the stock market at the same time? Well, it either went nowhere or it suffered through one of its absolute worst decades in modern history. So, history gives us a pretty simple rule of thumb, right? When gold is flashing a warning sign this big, stocks don't do well. Plain and simple. They're supposed to move in opposite directions.
But that rule is being broken right now, today. So what gives? What's different this time? The answer seems to be that something is artificially propping up the market.
And that something can be summed up in one word: liquidity, a massive wave of money. You see, a ton of cash was pumped into the system back in 2020 as part of the pandemic response. And all that cash, it's acting like a giant cushion, propping up the prices of things like stocks and kind of just delaying any potential pain. But here's the catch. That cushion creates a really fragile situation. It only holds up as long as inflation stays low, somewhere below that 3% mark. If inflation starts to heat up again, that whole support system could be in big trouble. So this liquidity cushion, it's actually hiding a much deeper problem. And now, a new warning is starting to flash, and it's coming from arguably the most powerful market on the planet, the bond market. To really get this, you need to know about a group people call the bond market vigilantes. It's a cool name, right? These are basically the huge, powerful investors who act like a check on the government. If they think economic policies are getting out of hand and are just unsustainable, they protest. And how do they protest? They start selling off government bonds.
And guess what? Right now, these vigilantes are sending some pretty clear signals that they're getting nervous. They're demanding higher and higher interest rates on long-term government debt. And that's really just their way of saying, hey, we're starting to lose faith that you can pay this back in the long run.
And this brings us full circle, right back to our messenger, gold. Gold's frantic warning signal seems to be tied directly to this stress we're seeing in the bond market. It's almost like gold is listening to the bond vigilantes and totally ignoring the party happening in the stock market.
Okay, so what do you do with all this? Now look, this isn't about panicking, not at all.
But this strange disagreement between markets, it really does call for a specific kind of response. It's a time to be thoughtful and careful.
The source material lays out a pretty clear three-step mindset for a moment like this. First, just be prudent. That means just accepting the fact that the signals are disagreeing with each other. Second, think about optionality. Holding some cash on the sidelines isn't about being afraid, it's about giving yourself choices for when things eventually shift. And third, be disciplined. This is not the time to just chase whatever's going up. You need to be selective.
And why is this so important? Because history tells us that when tensions like this finally do break, it doesn't happen quietly. It happens all at once, suddenly.
And when you think about it, that's what gold, our messenger, has been trying to tell us this whole time. It really leaves us with one final crucial thought. In a world sending you all these conflicting signals, maybe the goal isn't just to be confident. Maybe the real goal is to be prepared.
Most investors are going to spend the rest of the year just chasing headlines and reacting to fear. But the real edge, the real alpha, is in understanding the underlying structure of the market before it becomes common knowledge. So if you want to keep your focus on the signals that actually matter, this is where we do that.